Good morning and welcome to the Leadership Insurance Podcast. I'm your host, Alex Bond, and I'm very lucky today to be joined by friend of FinPro, friend of the podcast. Doug is back again, and I'm trying to think. It's probably the I think you're the second guest to come back twice, but it's a small pool of people, Doug. I wish I'd like to say you're the first, but you're sadly not. But welcome back. Thanks
Thank
for
you.
joining us.
Yeah, no, thanks for having me on again. Very excited to do this. It's always fun to do. I feel like we have these conversations quite frequently, but to record them is hopefully interesting to the rest of the community.
Yeah, I think that's always the challenge. I was saying this earlier. We were pitching for some business in the recruitment realm that we work in. That's really where we operate. We were pitching for a search, but it's someone we know really well as a friend. And I actually had to say to them, it was like my start was go pretend we don't know each other, because otherwise there's definitely going to be something that I need to know that I won't know, because we'll assume knowledge of each other. So I'm going to try and take that attitude today. So you and I have obviously we talk fairly frequently. We tend to kind of catch up whenever you're in town or I'm in your town. So we're going to pretend we don't, and we're going to dive into your new venture. So before we start doing that, Doug, as is tradition on the show, introduce yourself and then introduce your new business, Turris, and what you've got planned for that.
Yeah. So Doug Ver Mulm, now two-time founder, three-time actually, if you count a little side business that I had back in the day, which happy to chat about. Former attorney, obviously from the States, in the New York area now, and kind of a latecomer to insurance as far as like my career is concerned. But the more I get into it, the more I fall in love with it and all the nuances and all the interesting characters. And now this, it's not new anymore, but the whole InsurTech movement and how it's evolving and changing and how incumbents are trying to incorporate it. And it's just like a really interesting, I think, career to get into. And yeah, just happy to be a part of it. Turris is my new startup, relatively new. We are not a InsurTech, quote unquote, but we are a FinTech serving the InsurTech space. So a vertical banking and payment solution, challenger bank, neobank, whatever you'd like to call it, but that's solely focused on the insurance space. So our first customer segments are brokers, so independent agents in the US. We are starting to work with a few MGAs as well, and then have desires to eventually start working with smaller carriers. Focusing on a lot of different things, but think about a bank and kind of what they do, and that's obviously a large part of what we're doing. But then trying to optimize it for the insurance space. So very complex financial operations involved, even for very small companies. A lot of different parties that money gets moved around to, a lot of custody issues, a lot of lending needs that are needed and not quite understood by the typical banking community. And then a lot of integrations and data that can actually speed up a lot of those processes that typical banks and payment solutions just don't have the capabilities of ingesting and making use of. So that's a lot there, but maybe the easiest way to think of us is a neobank focused vertically on the insurance space.
Perfect. Yeah. And I like the way you condensed it down for me, because I think that's the important thing to focus on is that why do we need a bank that's specifically set up for the insurance industry? What are those kind of unique challenges and yeah, I think to answer that as well is that, where does this come from, this need? Because you had an MGA before and stable, and then now you're on this pathway. But so presumably, were these problems that you ran into on your previous venture?
Yeah, so it ended up being something that took up the majority of my time as we thought about scaling up the operations at Stable at the commercial auto MGA that I started. And when I started that company, I didn't think of that as being an issue, right? It's like, okay, we'll get a bank account, we'll get a payment solution, and we'll have some accounting needs, but no more so than any other startup would need or any other small business would need. We were very wrong. Our relatively small book of business at Stable, kind of at the top, we had one full-time person kind of internally focused on moving money around, getting it to our brokers, taking payments, collating all of that. Obviously, a lot of data entry was involved because our bank wouldn't allow us to, to access an API to move money around. So once you get a human involved, even if they're the best human in the world, there's data entry mistakes that take place, and then you're unwinding those and figuring those out. You're explaining double entry and premium entry to your accountants. When you're starting your bank account, you're trying to explain to them why you're moving money around as quickly as you are in large amounts when you're only keeping a relatively small portion of it. So yeah, just a lot of complexity, I think, in setting up all of the operations. But then I think how it distills down, at least the three immediate problems that we're trying to tackle that are specific to the insurance space, and I think why you need a set-aside solution. So payments is kind of the first one. So Stripe, amazing product, obviously, especially from a developer's perspective, very easy to integrate with. But from an insurance perspective, it's very expensive to collect payments via Stripe. So 2.9, 3.5% in the US of every dollar goes to Stripe. If you're a SaaS solution with 80% margins, that's an okay thing. But if you are an MGA who at the end of the day may only be keeping 5 to 7% after you pay your brokers out, that's a lot to take on. That could be up to half of your actual margin there, just going to those fees. And so it's just expensive, unfortunately, for a lot of insurers. But there's really only a couple of games in town, and Stripe seems to still be the best. And then on the lending side, what we have is these really strong books of business, whether it's an MGA just showing great growth in a single product line, or a broker that has, a segment of the economy that they're focused on, let's say like technology SMB companies. Their books are not counted as real assets. They're counted as intangible assets versus like if I was going to go out and buy a fleet of vehicles or manufacturing equipment. So there's nothing for the bank to kind of get a hold of and say, okay, we could sell this, this asset if we needed to foreclose upon it. We feel differently, and there's a lot of companies starting to pop up that are helping you kind of sell different parts of your book. Obviously, these books are very well thought of from private equity companies. And so we see a lot of value in these intangible assets. And I think it's really just understanding the risk associated with them, and then maybe like how that broker is diversified across the economy. Are they focused on one part of the economy that might be harder hit by a recession? Or are they like a local broker, in a growing part of the country that just deals with a lot of different small businesses? Those are two very different types of risk profiles from an underwriting perspective for lending. So trying to take that into account to give better products to the space. And I think the third big thing is just all the data that exists to move this money around. It's now sitting in policy admin systems. It's sitting in agency management systems. And you don't need to have a person kind of taking data out of your policy admin system or your agency management system, putting it into a spreadsheet, and then taking the results of that spreadsheet and putting it into your bank. You should be able to connect all of that. I think with insurance in particular, like we are highly regulated, right? Brokers are highly regulated, MGAs are, insurance carriers absolutely are. So we feel more comfortable as a bank giving access to our APIs to allow for those automated processes to happen. The fraud can take place because you're automating some of that. There's no human involved anymore. But we as a bank, or we as a partnered with banks, feel comfortable taking that risk because of the highly regulated nature of the space. So those are kind of the three key areas that we've honed in on as reasons that there needs to be a company or a bank focused just on the insurance space.
Yeah, it makes sense as well. And the insurance, just by the nature of the moving parts of the business, is like you look at it and it's always going to be an inefficient ecosystem because there are too many connecting elements, and they're all connecting businesses, and everyone is taking a point on the dollar at every kind of transaction point. So you're always left with kind of those leakage points, and it makes sense if you can kind of make that more seamless. But this is a much bigger challenge that you're kind of taking on. How did you have the confidence to tackle something like this? I mean, it might speak to you just as an entrepreneur, and maybe that is it. You know, I know you've got a really good founding team as well. You know, how much has kind of team played in the confidence that you can tackle this scale of challenge?
Yeah, so I'd done a lot of research when I was at Stable on banking as a services platform. So there's been a lot of advancements made in the space, like on the financial services side space, to allow for you to launch some of these products much faster than you could a decade ago, and with much less cost. So the way we kind of think of it is we've built some technology on top of those services. So banking as a services platforms, we're renting a PayFac to start with. It's not our own infrastructure. I think the value that we're building is like how that money moves around on top of that. And then eventually, as we scale up, we will take over the underlying infrastructure just to increase our margins and increase control over those products. So that's helpful, right? It's easier than it was, but by no means like easy still. I think it's funny. I was talking to somebody the other day, and they're like, "Okay, you went from trying to launch, this mini insurance company, this MGA, highly regulated, lots of moving parts, lots of partners involved, and then now you're trying to do a bank, and a payments company, and you want to do lending." In the States anyway, those are almost three. They're all regulated by the same body, but three different, different sets of laws that regulate them. Lots of compliance needs, making sure you're doing things correctly. You're custodying people's money. We're now custodying like almost a layer down, right? Because we're custodying the carrier's money and customers' money as well. So yeah, a lot of complexity and difficulty. I think my former legal background definitely helps with that, in at least taking the first step and maybe just knowing which lawyers that we need to talk to make sure we're doing things correctly. So we have a really good legal team, a couple different legal teams that we work with, that always point me in the right direction, whether it's something that we're writing or a product that we're building. And then just the founding team in general, they saw the complexity at the MGA, and one of them comes from the fintech space as well. So yeah, I think it's just the culmination of all of that gave us the maybe outwardly it looks like hubris to say that we could actually do this. But I also think we're in this interesting point of startups where when capital is cheap and things like AWS and different infrastructure came along to allow you to very quickly launch products, it shrunk the moats around those. Like anybody else could kind of follow on and do what you were doing. So I think to some extent now, to create value, at least in our view in the fintech space, you need to take a big swing and you need to start building that moat almost immediately. And if you don't, like if it's too simple, if it is just a point solution, you're going to have copycats that come along very quickly, and you won't be able to defend a moat and create value for your investors at that point. So definitely a big swing, but we just feel like it's one that's needed for the space, and it's the best way for us to create value for our investors.
Well, if you're going to take a swing, take a big one. Why not? I'm a big believer in that, though, and I think because by default of taking a big swing, you put yourself in a position where there's going to be less direct competition quickly because you're being more ambitious, and some people might take these kind of point solutions. But then the other thing being is that it speaks to the true challenge faced by your target customer. This is not the same thing at all, but we've just switched all of our systems internally because we had some automated marketing system, we had a candidate management system, we had a phone system, we had a sort of SMS system, we had all of these different systems. And from a small business perspective, going back to this payment thing, I'm paying 7, 8 different separate companies. We now switched to a system where all of that is included. That's the only reason I shifted. So it's like if you're going to set up a kind of banking payments facility for insurance, there needs to be that one place I can go and solve all of my kind of problems. Otherwise, why do it? For one section. But then arguably the single vertical probably isn't enough. I thought it was interesting as well to think about this when you were talking. I was like, what do you think this allows to do for that kind of want to be entrepreneur that wants to launch that small agency, wants to launch that specialist MGA? Is this the sort of thing that there's an enabling element of that? This is going to allow entrepreneurs to launch more quickly, more efficiently?
Yeah, well, so definitely more efficiently. So I think if you're at the beginning of your journey and you're setting up that solo shop or, very small MGA, maybe you're a brilliant underwriter and you've gone and got that capacity. Now you're trying to set up the operations side of things. Like, how do I collect this payment? And great, I'm using, Instanda or Socotra or Josh U, but how do I actually make my margins? So I don't have to use Stripe and integrate with that. So yeah, I think we can quickly help those entrepreneurs set up. But then I think as we start building our credit facilities and have different lending options, I think we are just going to be able to see like, okay, we see a lot of demand for that product that you're launching or the space, the specialty brokerage space that you're getting into. And we're actually fine giving you some money like right up front, and especially if you're using our payment system. So it's almost like it Shopify to an extent where we help you set up that capability of taking payments in. And then Shopify, after they allow an online business to do that, they start offering lending options to them. They say, great, here's some working capital for you. So absolutely, I think we are hoping that what we are doing from the lending perspective does allow businesses to grow more quickly and maybe just feel more comfortable taking a risk and going out on their own, knowing that the financial infrastructure part of this is now covered and it's one less thing for them to worry about.
Yeah, I guess, I mean, echoing your journey is that I think many founders I talk to, it's almost an ongoing joke on the podcast is that you set up business because you're, like you say, maybe you're a good underwriter and you say, I'm going to set up an MGA and create unique products. And then you spend yourself being like part accountant, part ops director, part legal counsel. And that's the thing that I think that's small businesses all over, but particularly in a regulated market, there's always that risk as well that even if you're taking advice, are you taking advice that knows the regulatory landscape that you're dealing with in? It's easy to assume that you're giving it across to an expert, but you're not. So the fact that you build a kind of financial services facility all around one vertical is kind of an attractive proposition. Where are you in the journey of this? Are we launched? Are we live? Or where are we on the kind of the timeline?
Yeah, so we this one has gone a lot faster than MGA. I think it took me like 3 years being a broker before we got our capacity as an MGA, but still a lot of compliance to deal with. Our goal is to have the bank aspect of what we are doing launched by the end of the year. That is completely up to our banking partners and regulators, so out of our hands at this point. But we've built all the technology to allow for compliance people to get comfortable with what we're doing, to make sure that everything kind of checks their data security needs. And then we have that in a few design partners' hands right now. On the payment side, that will be live hopefully within the next month or so. And then kind of the first little wedge product that we've built is for smaller brokers that are taking payments. And it sounds complex, but it actually was since we built all the infrastructure ourselves, it was quite easy for us to prop on top of that. It's a payments tool that allows you to earn some high yield while you're waiting to send those funds on to your carrier partner or wholesale partner. Back at least in the US, back in the day, we found out there's a lot of brokers that were doing this, like in the 80s when interest rates were very high here. And in a low interest rate environment, new brokers kind of forgot that wasn't even a thing that they could do. Some states do have laws around like what you can earn and whose money it is. But most states in the US allow you to have full access to that as a broker while you're custodying somebody else's money. So we've gone through, and again, I think this speaks to like the legal expertise of what we're doing, like knowing which state that this money is collected from. We can determine how much you can actually earn there and make sure you remain trust compliant while you are custodying these funds. So that's the first product that we're launching, hopefully in a month here. But that's out in demo version already with some prospects as well. And then we're working with a few MGA design partners right now on the automation side. So integrating with their policy admin system, automating a lot of their payment processes and fund flow processes. And we hope to be rolling that out to a bunch more MGAs early in 2024.
Awesome. Yeah, I was thinking about the collaboration opportunities with you and lots of other InsurTechs. And that kind of leads me on to sort of a slightly non-directly Turris element. And we were there for the launch of InsurTech Association in New York, which I know that you are I don't know what your role is within that now, but you're definitely there at the start, and definitely part of that with Josh Hollander, who's a good friend of the show as well. So there's how much does that how much is your decision to get involved in that playing into kind of where you're going to be? Because presumably it's a good place for you to be at the center of kind of a lot of kind of insurtech innovation. And yeah, I mean, I'm interested to find out more about the association and really why you think these things are important in the insurtech ecosystem.
Yeah, so that was more of a happy confluence. I think when I took the ITA role, which I've definitely stepped back from, and but like it's all volunteer. Like everybody in there is a volunteer. So stepping back is more publicly than anything. But I think I'm still the volunteer executive director there until somebody else wants to take that mantle, some other. But no, I'm very happy to keep doing that. So I took that role back in December when I was wrapping things up at Stable, and mostly because when I started Stable, again, I came from a legal background, not a typical entrepreneurial journey. I worked in house at Mercer. I still have friends there that are asking when I'm going to come back and stop all the silly startup nonsense. Just lawyers are super risk averse people, but I had the luck, I think, of being in New York at the time and just meeting a lot of other people that were in the InsurTech space, in the FinTech space. New York was like a hotbed, still is to an extent, I think, for that, especially on the FinTech side. But I found mentors that really helped me understand what I needed to be doing, from both the startup perspective, but then like startup specifically for the insurance space and how regulated that is, how you need to think about things. And that community aspect was something that I wanted to try to get back to when Stable wrapped up and more formalized, because anybody could call me at any time or reach out and talk about starting an MGA or different regulatory things or just like startups in general. But I thought it'd be interesting if there was a way for me to formalize some of that into a role. And so Bob and Josh, when they were starting the InsurTech Association, asked if I would come on. They were looking for a founder that would kind of sit in the front position, help formalize a lot of I think the structure of the organization and figure out what we were going to do. And it was fun, like for the first 3 months, I think, of this year, I really focused on it. And it was kind of a mini startup, right? We had this idea of what we wanted to do, like this value we wanted to provide to a customer segment, other InsurTech founders. We've gone out and tried to get investors, like our sponsors, right, are the investors. And I think we're still trying to find product market fit, but by listening to our customers, like saying, what can we do that would help you in your journey of this? And so we've done a lot of online things. We've done some live events. We've talked to other organizations like the InsurTech UK is a great organization, InsurTech India. There's all these other organizations out there, I think, that we're learning from. But there wasn't really one just like focused on founders in general in the US in the InsurTech space. And so that's what we've set up, and we're still working on, I think, optimizing for everyone. But we love, like, the feedback that we've gotten is great because, and not all positive, right? It's like, hey, you should be doing this, or this is what we'd like to see. That feedback we love because it helps us figure out exactly what we should be providing to that community base. But we have, I'll probably get this wrong, but I think we have like 60 or 70 overall members now, and about 40 of those are InsurTechs at this point. And a fair number of those are MGAs, which I think MGAs in particular, they just have a lot of needs. Startup MGAs have a lot of needs that they need a mentor for. They need somebody that's been on that journey before, that can help walk them through that. So that's the quick on the ITA, but happy to dive into any of that as well.
Yeah, I mean, I think it serves a really good purpose, and I'm a big supporter of it. And yeah, it speaks to a little bit of what we've been trying to achieve with We Are InsurTech Women, which is, to a certain extent, different businesses within the InsurTech ecosystem need different things, but everyone certainly needs that kind of market advice, that kind of, the person that's been there, seen it, done it, the person that's kind of made the mistakes that you don't need to have. It's why things like the Lloyd's Lab get such support from us, and that invaluable kind of Lloyd's market expertise if you're trying to launch something, particularly in the Lloyd's. But then, just building communities is so important because, one entrepreneur, me and you have shared this conversation many times, usually, pouring beer into our wounds of things that have gone horribly wrong. And that's enough sometimes. But usually it's that voice that gives you a new idea, that gives you a kind of new piece of energy. So I think it serves the purpose, but particularly I think where you focus on that earlier stage, because you and I go to lots of conferences. There's lots of conferences around InsurTech, and one, some of my cynicism with some of those conferences is that we go there and we see these massive companies that have got all the space, and then I go, is this truly driving the innovation? Now, it's a kind of balance of evils, right? If you didn't have these big sponsors, then these events wouldn't take place. But there's often not, there's like a moderate discount for kind of InsurTechs that are at the early stages, but that's where these kind of communities come viable. So I think building communities is super important. And I think it was a great initiative. What do you think the biggest challenge? You get the serial entrepreneur tag now because you've done 3 different businesses too within InsurTech. But specific to InsurTech, what do you think the kind of biggest challenges are? And that could be either practically or culturally, but I'm intrigued.
Well, so I still think we have, and you probably know, your team knows this more than anyone, like the ability to move some of the talent out of incumbents, and even have incumbents be supportive of that. I think that's still difficult, and that speaks a lot to how good the insurance industry is. Like, I think how well it pays, and the work-life balance that it provides. Why would I leave this job for no pay, working twice as much, larger chance of failure than success? Like, where's the selling point in any of that? So I think that's a big problem. It's a problem to the extent that, like, it might not allow for as much innovation to happen, but it's because the industry treats people so well. So it's hard to say that's a problem, but I do think it leads to longer term, investment issues around talent, right? Saying, hey, like, will you go and build this thing that is definitely needed by the space? And we as an incumbent just can't get comfortable with somebody building it. So I don't know how to solve that. There's definitely been different approaches, right? Internal innovation labs, obviously outside investment dollars coming in, which are now harder to come by in a higher interest rate environment. But my hope is, like, we kind of look at what's happened over the last decade when interest rates were low and people were shoving a lot of money into the space. It's okay, what can we actually take from that and apply it to the next round of what we're doing? Whether those are like innovation labs coming back into vogue with incumbents, or outside dollars coming back in, like, how can we do this in a more efficient and ultimately more successful manner? So I think that's kind of like an overall thing that I think about a lot for the space. In particular, like, for early stage, I don't know that this is ever going to change, and probably shouldn't, but just like, the highly regulated nature. So, like, how can I get educated to the extent that I need to be to launch this company? Because I don't want to, like, I have a limited amount of time as an entrepreneur. How can I find, the resources I need to get what I need learned, no more, no less, to get me to the next stage? And I do think, like, another plug for the ITA, it's not just the ITA. Like I said, there's other nonprofits out there. There are for-profits as well. All the conferences, I think, do a good job of helping with the education aspect. You have kind of like these in-between companies like InsurTech New York, that are obviously for-profit, but that I think they're doing their MGA lab right now, right? So they're great program to apply to learn some of these things. So I think as long as we can kind of keep building that community through all different means, not just the ITA, hopefully some of that gets solved as well. Just kind of having the resources in front of entrepreneurs when they need them to keep moving forward.
You raised a really pertinent point to kind of, I'm literally working on a role at the moment, which I was bemoaning to the team. And basically the money just isn't there because it's an early stage business. And we can feed back and say, look, the money doesn't match the skill sets you're trying to acquire from the industry. But they still need those skill sets. So, there's an element of people having to be creative. It's like, what can you do with fractional talent? What can you do with someone that's, that person is retired and bringing them out of retirement and just getting them to work a kind of 3-day week, or taking the sort of career contractor route, or is it an opportunity to give someone who doesn't have quite the level of experience, but probably, is going to get you there and is enthusiastic, and then you can kind of be a bit more open-minded. But all of those kind of challenges are the same in that we're confronted with the insurance industry pays very well. And it's very difficult to kind of pull people out of that industry, which either means that we need to set expectations on kind of startups, and particularly probably the relationship with the investors. I've seen that quite a few times where the investors are going, oh, no one in this business can be paid more than some arbitrary figure. But that just doesn't bear fruit with reality. People are paid different things. I mean, in your kind of previous experiences, or maybe in your current experiences, is that, or more that you're plugged in, you're very plugged into the InsurTech ecosystem. Is that kind of like downward pressure sometimes from like maybe investors, or do you think that's just an accepted part of kind of starting an InsurTech, is that you're going to have to take a really big haircut on your comp?
I think part of it is some of the people that come into insurance or InsurTech maybe aren't from the space, and they don't realize the value of what that role is. Whether it's like the connections they have to the market in a BD role, the very specialized experience that that actuary or underwriter has, or like the specialized claims experience that maybe is needed for the particular product they're building. So I think of it as like, if you were a startup, an AI startup explaining why this developer is costing me $400,000 right now, because if I need to get them from Google, or I need to get them from NVIDIA, wherever it might be. That's a conversation that startups, entrepreneurs seem to easily have with investors. And I think for this space in particular, there has to be that same realization. Like, this person that we are seeking, this need that we have, there's only 50 of those people that exist in the world. And so if that's the case, we're going to have to pay for one of those, and you need to understand that. And if we don't get that, then we've increased our chances of failure by X. So I think it's kind of an educational aspect, probably for the entrepreneur, but for the investors as well. And maybe just like taking the expectation, say, okay, like we do need another 500,000 or so to actually make this work. Or maybe we have to cut some corners somewhere else to have this be the case, and maybe contract out. You brought up the fractional thing, which I think my good friend Dylan Brand is now doing this. Small plug for him on the claims side. I brought him in full time from James River for Stable to run claims. We definitely did not need a full-time claims person, but we needed his expertise for a lot of what we were doing. And now he's starting to do fractional claims work, which makes a lot of sense, right? Farming himself out to maybe 5 or 10 different companies at any one time. As long as they're not competitive, they're getting the benefit of his 20 years of claims experience, which is massive. So I think there's interesting business models that will start popping up, whether they're one-off consultants doing it, or kind of like small shops that might be helping source some of that talent.
I think the education bit is a really good point, because I'm very fortunate enough to have pretty good relationships with the VC community. We work with a lot of them on trying to kind of help grow their portfolios. We see therefore lots of decks. We'll see quite early stage decks, and then I've done some angel investing And so we see decks, and what I find fascinating is that I'll see a hiring plan, which will be, we're going to hire these people and in these roles. Don't often see the budget that goes towards them, and certainly with my search consultancy hat on, I never see the budget on how much it's going to cost you to acquire those people. And look, I know it's we're talking about insurance. Quite often that's a grudge purchase. I know certainly a lot of the search consultancy fees are a grudge purchase as well, but it always kind of seems to me that it's for such a kind of thought out, labor intensive, granular process of things like investment, how sometimes that stuff can be like what I consider just be a gaping hole of reality, because it's going, not only are these people going to be expensive, they're probably going to be quite expensive for you to kind of go and find, because you might not be able to find them, because to your point, you know, good luck trying to find an AI senior developer right now. You know, like if you're not an AI senior developer recruitment specialist, or you don't come from one of the places that already does that, then you will not find one. Like you certainly won't find on your own. You won't get them cheap because they don't exist. So
And and
it's a fascinating gap.
I think we're overlooking one part, which is the time factor in here. If you have 36
Mm,
months of runway, do you really have 6 months? And do you want your executive team focused on that?
yeah.
What is the value of that? I mean, in my mind, it's like immeasurable, because you are, again, increasing your chances of failure by not having this specialist that you said you need, right? You've put it in your deck that this is a key employee that we're going to hire, but we don't really have the plan or the funding in place, or at least set aside to do that. And
Mm.
then maybe you find your second or your third backup after 6 months, but something that you spent 100 hours on as an executive yourself, and you really needed them 4 months ago versus 6 months in the future.
Yeah, it's really, it really feels like that kind of sunk cost investment like fallacy that you tell yourself. It's like, oh well, I've lost already, so I've got to hang on. And you go, no, sometimes you've just made a bad investment and cut that off. And it's the one thing that still, I've been doing this 17 years, and I'm still kind of driven to distraction by people going, oh, how much do you spend on recruitment? And they go to zero. It's impossible. It's an impossible thing because someone has done the work. We literally got it this week where we've got working with a senior exec who's having 24 first round interviews, and he's like, I don't spend anything on recruitment. I was like, that's 24 hours in 2 weeks that you're
Right.
spending trying to hire someone. So yeah, it's fascinating. But look, obviously I'm coming from a very selfish perspective. Doug, I knew we'd do this. We've flown through the kind of time for the podcast. So just kind of really want to finish on, you know, what's the time scale for Turris? What's next? What are we gonna, I know what we said about the kind of first products, but what does this next 12 months look like for you?
Yeah, I think it's just getting us live with our banking product, obviously payments product, the lending product. We're starting to experiment with some of our own capital, but getting the credit facilities built for that to allow us to scale some of that out. We are seeing some massive demand for specific products in the MGA space in the States here, that we definitely want to make sure we have the capacity to lend towards. Um, there's a lot of lending regulation that has to be followed as well as you launch in different states. I don't know that we'll get a premium financing product live, but there's just a lot of demand for smaller premium finance products. I think there's great premium finance products in the States already. A lot of them issued by banks banks have a cheap source of capital in their depositors. And so we're not at that scale yet where we can offer anything like that. So we still have to go out and get these credit facilities. But I think in markets that a lot of incumbents are pulling out of, I think in like Florida in particular, even like on the auto side, there's personal auto policies now that need to be premium financed, unfortunately. And there's just not, most of these premium finance companies are interested in kind of the commercial side and, anything 5 figures and above. They don't want to write that $1,500 auto policy. So I think there's ways for us to actually make a dent in that space, because some of the automations, like we can profitably write that and issue that type of premium finance product. So I don't know that that will be live in the next 12 months, but that's definitely some of the stuff that we're starting to think about. I mean, we're just excited to keep talking to, to potential customers in this space. Say where we were 6 months ago when we kind of envisioned this, it was all kind of based on what I saw as a need at Stable, and some of the design partners that we were speaking to at the time. I would say once a week, I get wind of like a new space that we need to be thinking about, or a new twist on the product that would be helpful, or a new ecosystem partner that would be great to integrate with. And so I think that's just going to continue, and we're excited to kind of see the growth of that.
Awesome. Yeah, I think that'll be the biggest challenge is staying focused on those kind of core offerings to start with, because yeah, it's a bit of a Pandora's box, I imagine, kind of looking at something like this. So, Doug, pleasure as always to talk to you. Thank you so much for being a guest on the podcast. And presumably we will see you next month in Vegas, I think is probably the next time.
Hopefully London sooner. We'll see. I'm trying to get a trip planned. I know
Good.
we have a restaurant, a new restaurant that we need to try here. So
We do. It's a sushi bun. I'll put a link below. We'll invite people along. See if anyone actually does listen out there. Thanks, Doug. I'll speak to you very soon.
thanks for having me on.